There are so many retirement accounts that I think the government tries to make it as confusing as possible just to mess with us. Just kidding. But there are a lot. So your 401k, your Roth IRA, your IRA, your SEP IRA, your 403b, there's so many. I'm going to break it all down for you so you know exactly what to do when it comes to your retirement. I am Taublieb, the host of the Early Retirement Podcast. I'm a certified financial planner and vice president here at Root. So we're going to hop right in. We're going to get right to it. Look at this. So we're going over a 401k. Now the first one, a 401k, what on earth is a 401k? 401k is your company saying we want to incentivize you to invest for your future. So thank your company for even giving you this option. For 2024, the most you can put in it is $23,000 if you are under age 50, and you get a catch-up if you are over age 50. That means you can put in an additional $7,500, so $30,500 is the maximum you can put into a 401k. But let's first explain, what does this even mean, okay? So let's pretend you're working and you bring in $50,000, okay? So you have a 401k option. What this means is you can put $50,000, so see, let's make this clear. $50,000 is your income. You can put up to $23,000 in your 401k, but that'd be really tough because you only make $50,000. So what you're gonna do is you're gonna only put in $5,000, okay? 10% of your income. So 10% of your income, $5,000 goes to this 401k. The government says, how much money did you make? And you said, I made $50,000. They go, well, did you do anything else, like save for retirement? You're like, yeah. They go, what'd you do? And you say, you did a 401k. That's right. And what you're gonna do is you're gonna tell them that, they're gonna say, good for you. So instead of us taxing you on that full $50,000 of income you made, we're only gonna tax you on 45. And you're going, why 45? And you're gonna say, because I put $5,000 into my 401k. And they're gonna say, good for you. So now what's gonna happen is that $5,000, you get to choose how it gets invested based on the options at your employer, and it's gonna grow for you. And it's gonna grow and grow and grow. And in the future, you're gonna pay taxes on it because you got a deduction at the beginning, you pay taxes at the end. And the beauty of this 401k account is you can put, once again, if you're under age 50, up to $23,000 next year in 2024, or whenever you're watching this video. So this is really cool. So contributions go in pre-tax. You're gonna see all these confusing terms here in a second, but contributions go in pre-tax. What that means is you are getting a deduction up front. So pre-tax deduction, put that in your head, pre-tax deduction. Now, it's gonna grow and grow and grow tax deferred, okay? What that means is over time, you are gonna not pay taxes. So as interest and dividends accrue, you do not pay any taxes. And in the future, you are taxed at ordinary income. Ordinary income, when I started in the industry, that could always confuse me. I go, what's ordinary about it? And what's ordinary about it is it's as if you just made more money. So it's just normal money. Just think about it like you just went out and got another job and you get taxed just as if you made more money, okay? So that's a 401k. An IRA is very similar. So you're gonna see a lot of similar terms here. An IRA, the difference is you don't need to be with an employer to have one. In fact, you can just go out and get an IRA, but you do need earned income. So the maximum for your IRA is $7,000. That's for 2024. And you do get a catch up of $1,000, so $8,000 if you're over age 50. You don't need to be with an employer. So you can just go out and do this. And as long as you make up to $7,000, you can put that full $7,000 into that IRA. Now you cannot put money into the IRA if you don't make any money. Okay, you need what's called earned income. So if you just are retired and going, can I put money into an IRA? No, okay, you need earned income. So as long as you're making a job, you can do that. Now, some people say, can I do both, that 401k and the IRA you talked about? And the answer is yes, but the IRA and 401k, there's a bunch of rules in between these. So don't just go do it because it depends on the level of income you have, and if you make too much, you get phased out, and if you don't make enough, you can only do XYZ. So there's all these fancy things. Don't worry about that for now, okay? I'll do a separate video for you guys. And let me know if that's a video you want. Just put in the comments, yep, I want to make sure I'm not missing anything, okay? Just say that, and I'll know what you mean. Then contributions are pre-tax or after-tax. Don't worry about that. Just think pre-tax, okay? Pre-tax is just a deduction. So super simple. You make $50,000. You put $7,000 in. The government says, thank you. Good job, Ari. You put $7,000 in. We're not going to tax you on 50. We're going to tax you on 43,000. 50 minus 7,000. You get a pre-tax deduction. It grows tax deferred. So as interest and dividends accrue, you don't pay any taxes. Then in the future, you take it out as if you just made more money. So that's a 401k. That's an IRA. Let's go to the Roth IRA. That's the big one. That's the big one you hear everyone talk about. And here's why. When you put money into a Roth IRA, you do not have to ever pay taxes ever again. That is right. When you hear Roth IRA, I want you to think tax insurance, okay? Tax insurance means you are paying taxes happily today to never get taxed ever again, okay? This is my favorite example. This is a super simple calculator. Okay, let's pretend you have no dollars today, okay? $0. Now, what you're gonna do is you're gonna put $7,000 in every single year to this Roth IRA, okay? Now, the future, who knows what it holds? You know, that's what we want to know. What if you put $7,000 every year? Let's assume you get a 10% rate of return, and I don't know, but let's just assume we're going to do this annually. Okay, $7,000 every year you're going to put in, and let's just say that you do this for the next 30 years. Okay, what you're going to see, let's calculate this, is you're going to have $1.1 million. That's pretty awesome. Okay, you're going to have $1.1 million if you put $7,000 every year for 30 years. Okay, well, why is this so awesome? Well, the reason it's so awesome is we go, wait a second. Okay, what if we don't, let's put this back to 0. What if we don't get any growth? Okay, let's just say, what if you don't get any growth? Well, what this is saying is you personally put $7,000 in over 30 years, and that means you put in $210,000. But guys, it grew to $1.1 million, which means all of that growth was tax-free forever. You didn't attend any meetings, you didn't do anything amazing. You just got growth on your money. So once again, only thing we're changing here is you now get growth of 10%. And now you go, oh my gosh, $1.1 million. Now, what if your growth rate is 8%? Okay, still $800,000. You only put in 210. So this is the benefit of a Roth IRA, okay? So Roth is after tax, not pre-tax. You get no deduction. So super simple example, you make $50,000 and you're gonna put $7,000 to a Roth IRA. Government says, good for you, Ari. I say, thank you so much, I'm great. Just kidding. Then they say, but we're not gonna give you any deduction today. You're like, why not? I thought I saved for retirement. And they're like, you did, but you don't get the benefits today because you're never gonna get taxed ever again. Those people that do 401ks and IRAs, they get a deduction today, but in the future, they're gonna pay taxes, not you. So Roth is after tax. It's also tax-free forever. So all the earnings accrue tax-free, and when you take it out, it's tax-free. So some people will tell me they've got $1 million, but they don't. The reality is they have $700,000 because they're gonna get taxed like crazy on it, okay? Now let's go to the next one. Roth 401k. This is only with a company as well. So IRAs you can have on your own. 401ks you have to be with a company. Now a Roth 401k works just like a Roth IRA. Look at this. Let's uncover after tax, tax-free, tax-free. You can see everything's the exact same as a Roth IRA. The only difference is it's with a company, so you have limited options. You can't invest in whatever you want. Now with a Roth 401k, the thing that's really cool about it is you can put up to $23,000 in it, and assuming your income is below the threshold, you can also do a Roth IRA. So you might be able to put 30,000 bucks into a 401k and a Roth IRA and never pay taxes ever again. That's pretty cool, okay? Now you don't need to put in 30,000. Please do not get lost on this concept that that's the maximum. I need to hit that, and if I don't, I'm not gonna be okay. Okay, that's bogus. SEP IRA. SEP technically stands for self-employed pension, but this is for a small business, okay? There's a lot of nuance here, but this can be both pre-tax or after tax, and it is tax deferred and it's taxed in the future as if you just made more money. So more nuance. Before you go do a SEP IRA, make sure you work with a specific planner that focuses on people who do have small businesses, which we have a separate department here at Root who do just that. So reach out to us if that's something you're looking for. Lastly, a 457B. This is think of this like a 401k. Anytime you see 457B or 403B, very similar, very, very similar to a 401k. This is a government plan or nonprofit. So that's the difference here. You can see this is pre-tax, it's tax deferred, and it's taxed as ordinary income. So it's very, very similar to this 401k. The only difference is it's with a government or a certain nonprofit. So hopefully this was helpful to see. Just a quick 10-minute summary. What do you need to know about retirement plans? Hopefully you can skip to the one that applies to you. I want to make sure you don't leave any money on the table. So if you want to develop an amazing retirement plan, reach out to us. It's what we love to help do. I love helping people retire early. That's what I specialize in. We have team members here at Root that specialize in something different. So if you're looking to retire early, great, reach out to us. We can help. If you're looking to optimize your business, great, reach out. We can help. We want to make sure that you're not leaving any money on the table unnecessarily. And we want to craft your dream retirement. So hopefully this was helpful. If you have any questions, of course, leave it in the comments and I'm going to make videos just like this. So I make content based on what you guys tell me is helpful. Love you guys.